We have experienced a lot of volatility in global equity markets, including our own markets. Quite a few reasons why the volatility had persisted over the last few weeks and might create headwinds over the next few weeks. In terms of valuations, the valuations did look at the fair end, and to that bit, a logical bout of profit taking was warranted both in the Indian markets and the global context. The other argument also was that bond yields had spiked up quite significantly. The Indian bond yields crossed the 7.5% mark and the US 10-year paper almost reached 2.95%. Again, what this does, it reduces the spread between the bonds and the riskier equity assets. And to that bit, a lot of flows probably start moving into the bond markets. The third angle that was also important and pertinent to note was the inflationary factor, both in the Indian context and the inflationary factor back in the US markets. The fourth obvious factor is also the tightening rate that the Fed will pursue. And in that sense, the governor's comments of 3 to 4 hikes in this year means that the end of easy liquidity and easy money will no longer be available to the markets. The markets had got a lot of liquidity support, and that was why the buoyancy continued. But because of all these factors combined together, you've probably seen some amount of froth which had developed into the markets being taken off and markets coming down to far more sustainable levels. Now, how does the picture look going forward? I think all these factors will still keep on playing headwinds for the market. But what the markets would ideally like to observe is how the corporate earnings have panned out. Q3 was far more better of what we had observed over the past few quarters. And the next trigger for the market is going to be the Q4 numbers. What the Exchequer has done in terms of grandfathering of the LTCG cause, I think that to a large element does protect the kind of prices that one looks at. But again, I think this will get digested over a longer period of time. The third angle becomes in terms of global earnings, and again I think how the yield movement will be along with the crude movement. So crude prices can be a joker in the pack. If crude moves up far higher than what it is trading at this point of time, it does impact the fiscal deficits of a lot of important countries, including India. So that is one important facet to be watched out for. In my opinion, over the next few weeks, we might witness a sharp time correction into the market. I think this will be precluded by a small price correction. And to that bit, I think what comes out of Q4 results, specifically after April 15th, will be closely monitored. The initial trends of monsoon is something to be seen. In our own context, the inflation numbers are going to be an important aspect to be looked out for.